ultimately, real price in the physical world and paper price will converge to the balance between demand and supply. They like it or not. Alternatively, no one is going to care anymore about the paper price. And it becomes a mess all around because people will start having like local price of silver. Maybe from one city to another is going to be different. And that's a big problem for global corporation and supply chains.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited because I have first-time guest to the show, although someone that I know many of you are quite familiar with. That is JustDario of Twitter, YouTube, and of course his own website. And obviously, he's been looking quite closely at the gold and silver markets. I know a lot of the people in the audience read your work already, so Dario, great to have you on here, especially at this particular time where in the past 6 months we've seen, I mean, even farther back, but certainly this past 6 month time period, historic activity in gold and silver. A lot of people still catching their breath, wondering what happened, and be great just to put that all in context, especially as people think of, well, where exactly could we be headed from here? So great to have you on here. Thanks for making some time. And how are you today?
Thanks a lot for having me on your channel. And yeah, feeling very good. It's a definitely exciting, very exciting time for gold and silver. On silver, we're happy to expand quite a bit since I think we are on the verge of something very historical. A small comment on gold. I mean, gold is supposed to be boring, let's say. Reserve is a central bank reserve asset, is a monetary asset and whatever. Even in gold, we recently experienced like awkward level of volatility and awkward behavior that to a certain extent don't really belong to gold as a precious metal. So definitely the commodities, the precious metals market is becoming like more and more interesting in this overall environment of monetary basement, because effectively that was happening. That's mostly the reason why things keep going up, you know. But if things going up overall was a good thing at this time in Venezuela, they would be like rich beyond any imagination. The stock price is stock market is like think above and beyond the stratosphere in terms of index terms. There are plenty of other examples, but happy to be here and let's dig in.
Yeah, well, like you said, it sure has been an interesting time. And as we take a look at our silver chart there, this is the 6 month silver chart, which brings us back to September. And if you can believe that, back in the old day when you could get an ounce of silver for less than $40. So it's stunning. And if we'll back up a little farther to the 1 year chart, because after sitting there watching the silver price go back into the under 18 back in 2022 and then sitting in the low 20s, with this whole latest rally really began beginning of 2024 with gold. Silver started about a month later in February. So it had been going up, got up to $35 before the reciprocal tariffs were announced. I think it dropped below 28 then. Can you maybe take us back to the reciprocal tariffs where we're below $30 silver close to a year ago, and just walk through the key events, because we really had this stunning, again, even into September, under 40, and then just goes insane volatility unlike we've ever seen, kind of matching all the buildup that people have been waiting for the last 50 years.
Yeah, sure. Actually, it's very interesting that you mentioned like the reciprocal tariffs event, because at that time, both gold and silver went down a lot. And if you think about it, is actually counterintuitive. Why? Because reciprocal tariffs are inflationary. Of course, there is no doubt about that. At, at the time, like there were some people saying, "Oh, well, it's gonna be deflationary. It's gonna, slow down. It's gonna slow down growth, but it's gonna bring into new money. They're gonna solve the deficits and all sort of nonsense, like really." And at the time, like gold and silver, like went down, and this was the narrative that was tailored around it. But one thing that I always tell people to pay attention is that there is a problem with narrative nowadays, is that media, especially mainstream media, are in a perverse game of constantly striving and to be the first, striving for attention and to attract click as much as possible. While before you couldn't do this, like many years ago, because the newspaper is there, right? So you needed to produce quality in order to have like advertisement on your paper and whatever. So you couldn't have like the breaking news on there. Now it's all about having the headline, and everyone goes to click on that link and they see the advertisement. So many times it doesn't even matter if it's right or wrong. Like so often there are cases of garbage that have been put out there, but you know, that's it. They don't even put the name of the journalist anymore. They put like either a Bloomberg News or a Reuters News or whatever. And I pointed it out several times. So that narrative was completely nonsensical. Why the gold and silver prices went down at that time? It was a liquidity event to a certain extent. So this is one thing that people need to bear in mind. In the market overall, there are, generally speaking, three assets, okay, that are constantly very liquid and akin to, that can be fetched to meet like margin call, to rebalance your portfolio and whatever. The first asset is cash by definition, and preferably US dollar, because US dollar you can exchange it for every currency, but not the other way around. If you have, I don't know, the yen, the Japanese yen, and you go to, I don't know, Africa on holiday and you show your JPYs, I'm not sure they will accept it up front, but if you show your dollars, everyone recognizes the dollars across the world. So you have cash, treasury bills, that is pretty much cash. It's just cash you will see in a month, 3 months, 6 months, and so on. And gold. These are the three assets that whenever major financial institution, they need to fetch liquidity very quickly, they start selling. Okay. And of course, because of trading algorithm like beta strategy and whatnot, silver has been historically considered a leveraged bet on gold. Right. So once gold comes down, silver pukes. At least this was the case for quite a while. And that's what happened at that time. And not surprisingly, it quickly recovered. I mean, because the narrative was wrong, because these people are printing more and more money. Those reciprocal tariffs, like you can barely see the effect in improving the US deficits that in reality is worsening. Because that's the truth. And I like to keep things simple. Everything that has limited, very limited and fixed supply in these days, in a very high inflationary monetary environment, at the numerator, you have, imagine the total amount of money that keeps growing. And at the denominator is fixed. The nominal prices are for sure going to go up. It's how it is, because what we are experiencing right now is monetary inflation. And this monetary inflation sloshes around the system. There are many release valves. Stocks precious metals, consumer price indexes, and so on. It's not like a constant tide that rises. It's similar to the effect of the moon to a certain extent. Like if the moon is in this side of the globe and it pulls the tides in this direction, and the other side it looks like it's dry. It's like, oh, now we're going into disinflation and there's going to be deflation. And I'm like, guys, just look at the M2 money supply. That's all you need to know. Okay. Then you need to see where it is going. In the moment it is exhausted itself in one side, it starts spilling out in another side, and so on and so forth, like the tides. So this was silver back then. But then something started to happen. Okay. Why? Because silver, yes, it has been, historically considered poor people money. But silver went through an incredible transformation during the latest years, because silver is the material with the highest electric conductivity out there. It's nothing bad. Right. The reason why silver wasn't used that much before was because it was too, not business viable to manipulate. Sometimes it was hard to source and hard to process because, the cost of processing silver when the prices of the goods was not high enough, it didn't make sense. Back in the early 2000, when we started to see the first electronic consumer goods like phones becoming widespread, few people remember, but there were gold into Nokia phones, because gold is right after silver in terms of electric conductivity. And at that time, the gold price was so low, and gold is quite easy to process at an industrial level, that it was actually used, to make semiconductors. And then the higher the price went, the more it started to be replaced. But then we get to silver, because silver is needed if you want to have semiconductors, electric components of whatever sort, that are as small as possible inside, but as powerful as possible. So when people nowadays say, oh, they can replace silver with copper, if they do that, your mobile phone is going to become double in size. So either we double the pocket of your pants as well, and you go around with a iPad size phone.
Actually, Dario, quick question on that. I'm guessing you saw those reports a month or two ago by Bloomberg, that some of the solar panel manufacturers, where there has been a lot of thrifting going on, so two of them said they were trying to do it with copper. I guess some of the counter arguments I heard is that maybe it's possible, but not going to be overnight. Although one of the issues with that was that, I guess with the solar panels, because they have the manufacturer warranty, so they're concerned, you put copper in them now, and then 15 years from now, you're going to be getting a lot of returns. Any thoughts on, because along the lines of what you were just saying, have you heard any more about that?
Let me be honest here. These medias like Bloomberg sometimes tends to write a lot of nonsense. I'm not even sure if they fact check the sources, but for sure, the higher the price goes, the more there will be an effort to find alternatives. But you said it correct. Imagine like copper into solar panels. Like solar panels, for the way they are built and whatever, they are constantly exposed, to the weathers.
Yeah.
Okay. And as a matter of fact, most of the solar panel installations, because we think about solar panel like the one on the roof of our house, our building, right? But that's not where really the solar power generation is. Most of the times they are like in open desert, they're like in very open fields and whatnot. try to put something like, you know, copper into something like that. The rate of degradation of that solar power is gonna be crazy.
Okay.
I mean, that. I mean, that's literally. I mean, I knew it already. I pick up the phone. I checked with friends that are in the business, and they're like, the current technology is not possible. I mean, especially like in the type of environment. So yes, they will try to find alternatives, but at the current price, silver is still so cheap. I mean, in a solar panel, you have like a couple of ounces of silver. In a Tesla, in an EV battery, you have a couple of ounces of silver. In an Apple iPhone, you have 7 milligrams of silver and so on. There is very little silver everywhere, but is in millions of units that are being produced every year and cannot be recycled. I mean, imagine the cost of taking out 7 milligrams of silver from your phone compared to the value of that.
I've seen some of those guys who are doing it. I mean, and it's actually an intriguing business model. It's not. I think some people are like, "Oh, I'll just go get a sack and a pickup truck, throw it in there," and I mean, it's intense stuff, but yeah, it's
But people were
not
doing it
easy.
with Nokia phones. Remember, they were like taking out all these things, melting and making like gold bars, ingots.
Yeah, yeah.
So, so the
But I
silver
guess
price is too low.
so. I mean, as we come a little farther, we had the reciprocal tariffs, which you mentioned, and I think you're quite right about how liquidity factors in. We saw that in 2008 when silver went from 21 to 9. Same thing in 2015 when it went below $12. So, are you of the school of thought that as we saw this accelerate September and into October, because this is something I see people debating, was this just, well, the price on the COMEX speculators bid it up, they bid it down, but it sounds like you are of the school of thought that no, this is more of a physical supply driven issue based on everything you've just been laying out.
I mean, I wrote about that like very very early, and then I had no doubt whatsoever anymore that the real driver was the difference between supply and demand, and the fact that silver stock above ground is being depleted at a faster rate than anyone so far is acknowledged. I had no more doubt about that on first on Thanksgiving night. It was Thursday there. It was Friday morning here for me when the COMEX went offline for 10
Yes,
hours, which
please,
was
please dig into this because as we talked
uh,
about before we hit record, I think it was your article. I remember reading something where it was like, it seemed like I have a better chance of transforming into myself into 1,000 ounce silver bar than that backup system and all the mechanisms in place simultaneously going down. What did you find out about that one?
uh, okay. Let me try not to joke too much about this because
No, please,
this is
please. Bonus. If you work in a good Ben Bernanke joke, I might ship you out an ounce of silver. You never know.
well, let's see.
It's a challenge, I know, but I think
So it was quite. So let me say, I was that was a very interesting morning for me. Friday morning was Thanksgiving night in US, and was not expecting much to happen. I mean, everyone was supposed to be busy in heating turkey in the US. It was Friday morning in Asia. It was like end of November, and then nothing happens. And then here and out of the blue, we started like seeing, and I started posting about it. I'm like, the price of silver is moving oddly, and then you start seeing like tuck, tuck, tuck. It got to the high that were reached before in October. It was 54. I remember that point. And when you see the last tick, then the CME server crashes. You stop seeing quotes and like, what's going on? It stopped? What happened? And a few minutes later, it's like, okay, announcement like CME servers are down. I mean, really? On Thanksgiving night? It's a bit odd. I mean, okay, algorithm runs round the clock, but truth to be told, there is always a level of human supervision, and then algorithms are geared in order, not to overwhelm like volumes, okay, especially around holidays, okay.
Yeah.
And that was Thanksgiving night. I mean, there's Thanksgiving night, there is Christmas night, there's New Year's Eve night. There are not many nights in the year where people literally want to do something else than like, watching the market, right? Especially in the US. So, and then, something like very odd came right after. It's like, oh, the servers are having cooling issues. I'm like, okay, here in Hong Kong it's still pretty warm, but I'm sure that in Chicago it's not that warm. But you never know, maybe climate change. And then I go check the temperature. It was 0. I'm like, okay, that's a bit odd. And then I'm like, let me check that type of facility. Because who knows? Like maybe, the CME is on a budget. It's just running like all its servers on Apple computers. Who knows? Because if it can go down like this, I'm just joking a bit now, but effectively, so that facility was tier 1 military grade type of facility with multiple redundancy features in order to guarantee with a absolute level of reliability, like 100% uptime, never had downtimes. Furthermore, in the case of cooling issues, because of the location of that specific facility, there is even the possibility to let external airflow into the facility. In layman terms, they could open the windows.
Yeah.
Okay. And the COMEX, the CME, is not the only client of that facility. That's the other thing. So you go to check the other clients that are in that facility in Aurora, and they're fine. So maybe they had, localized cooling issue exactly at that time, exactly around the machines that were running COMEX operations, CME operation. Let's not forget, these machines are so powerful that every single day they process like millions of transactions that are sent into this machine with a frequency of milliseconds.
Yep.
And on Thanksgiving night, where actually you have cooling issues, but let's assume that there is this possibility. And then I'm like, okay, everyone that works in a financial institution knows that every market sensitive operator and facility needs to have backups in another location, because you can have a earthquake, you can have a bomb, whatever, in one location. So you need to be back online quickly, and you need to have facility far away. And this facility in the CME, in the case of CME, they should be in New York. Well, apparently no one turned them on because the CME stayed offline for 10 hours. Like 10 hours. That's not possible. Okay? That's really not possible.
It's almost up there with the October 7th, where people are coming over the Israeli border. I've never been to Israel. I'm not by any means claiming to be an expert. I talk to people who are Israeli who say that that was impossible for that to happen, and it's interesting when you think about it. Dario, would you say that financial markets are an important part of government and human life culture? So it's like we're not talking about, Joe's Crab Shack. They ran out of liner bags or something. I mean, especially in the AI world, what does that say? If the CME can go down, I don't know. Does the military have better equipment than them, or what else can go down?
I mean,
Which I think is a legitimate question, but please continue.
let's be honest. In that case, it was a blatant excuse. They just pulled the plug because right after, when the information started to flow, basically they had almost 8,000 contracts issued for delivery and accepted for physical, and apparently they were much higher. There was a huge amount, and then you saw like JP Morgan, like later the day, like pulling out more than like 12 million ounces in one shot from the registered silver stock, and many other things that happened. And so clearly there were like things going on behind closed door. We don't know. Like later, like some accounts, near myself, I managed to verify that basically there was a huge count in Asia that wanted to close significant short position. But then on the other side, basically they didn't expect that people stood for delivery. They wanted delivery. And that's when everything started to turn upside down. And as a matter of fact, from that moment in time, the reserves of physical silver at the COMEX started to drop very, very fast. And the physical delivery request, like since then, and actually a few months earlier, you don't see any delivery notice at the COMEX anymore that is not accepted for physical delivery. All of them are stopped. So there is clearly a problem in the market. It's not just COMEX. Same thing is happening in China. Same thing is happening at the LBMA. I mean, so clearly there is an issue here. The issue is that all these corporates that need silver, they are starting to getting wherever they can find it. And yeah, so you can see in front of you what happened since then. So
Just a small dip over the past couple of years.
I,
And Dario, this I think is. And apologize, I interrupted again. Although in China, I often look at 800 tons, which how us Americans are. We're not good at converting things very well. Like what is a meter? And but that's 25.7 million ounces backing the industrial heart of the silver market. And for context, when the LBMA got in trouble last year, their free float, the lowest I saw was about 140 million right around October 9th when their market broke. So this is about a sixth of that.
so
Plummeting doesn't seem
exactly
CME
so
coolant like, if you will.
exactly. So this is the problem: is that the factories they need silver, and where are the factories these days? With all due respect, they're not in the US. They are in China and India.
Oh.
So that's where they're trying to pull the silver. And then on the 1st of January, it was announced shortly after that event at the COMEX, it was announced that China would have put export control on silver.
Yeah.
Why? As you can see in the screen in front of you, they were quickly running out of silver. So when people say, oh, it's a retail speculation or whatever, all sort of nonsense, I mean, what you're seeing here, maybe because, these days there is a little bit of cultural problem in financial markets. Everyone looks at charts, okay? They see a price on the chart, they draw lines and whatever, and then they try to make a story that is compelling to explaining what's happening. There have been stocks that traded at 2000 price earnings, and I saw people like keep drawing lines and say, "Oh, yeah, because this makes sense," and I'm like, that doesn't make sense. I mean, there were all these like software stocks that were IPO earlier last year, and I remember I had a conversation at that time because there was this stock like Figma. In my business, we use Figma. Okay, Figma is you know designer web design tool without without much fanciness into it, and they list this name and the price goes through the roof, and then people started to write this that sort of nonsense. I'm like, oh yeah, because Figma is gonna do this and that. Oh, the CEO of Adobe must be pissed because they could have like bought them like earlier. Look at that now. Oh, Figma is gonna become bigger than Adobe. And I was like, what? And now fast forward, that from IPO is like down 80%. I mean, there is an incredible disconnect nowadays between fundamentals and whatever else. Sometimes it works in the sense that, prices ultimately tends to normalize towards fundamentals. Sometimes the disconnect can be brutal and lasting very long across the board. And in silver, the case of silver, the misunderstanding was amazing. Mostly for human bias, people have an anchoring bias. They believe that what happened before is what's happening today. So it's like, oh, it's another case of all those like silver bugs, like silver squeeze and whatever. I mean, check how much engagement on social media there was about silver in those days. There was nothing at all till mid-January
Well, the
when people
experts came out of nowhere. I mean, 50,000 50-year experts quickly.
I mean, like seriously, like everyone was like, nah, it's like, oh, you see that increasing margins again, the COMEX is gonna kill it and whatever. And like, nah, like all this stuff. And I was putting other like the best one was like when you see the buzz and fussiness about the Bloomberg Commodity Index rebalancing. And I was like, so at that time there was a little bit more of attention because the price was already around like 75 or something after like two powerful slams. They were like, oh my God, a massive crash is coming because the Bloomberg Commodity Index rebalancing. And I was like, no one uses that index for investing. And overall in the commodity market, like the total AUM attached to the index is peanuts. It's like there is only one fund that uses that index. It's like roughly $2 billion of AUM. It's not like the S&P 500 where you have trillions and trillions tied to that. So, oh yeah, rebalancing is a big deal. Can really move a lot. Like they were saying, I was laughing at myself because they were saying, oh, should dump silver and gold and buy cocoa. Cocoa. Yeah, because cocoa is going to be included in the index. I don't know if you want to put it out, but you feel free to take out the chart of cocoa and see what happened to cocoa.
I actually look at the chart of cocoa and talk about it quite a bit. And Dario, I'm guessing actually you may have noticed this, and I'm pulling it up in the background here. But if you drop two zeros from the end of the cocoa price, you actually got basically the same move because cocoa was trading about $2,500 a contract for the better part of the last 50 years. And we will have that chart momentarily. Went from 2,500 up to about 12,500. So similar to silver's 25 to 125 almost. So yes, even though my chart is slow, I'm quite familiar with what you're talking about there.
So it was, I mean, and I put out an article explaining exactly why that didn't make any sense at all, and effectively nothing happened. So, I mean, clearly, to wrap it up here, like what's happening in silver, it's pure result of demand and supply dynamic. Supply is 800 million and is not gonna increase anytime in years. It's not gonna increase. Silver was so bad as a commodity in the past, was so unprofitable that most of the silver mine today is a byproduct, is a leftover. That's the truth. There are very few dedicated silver mines. A lot of the silver is a leftover. It was like, okay, just take out like this copper, this tin, this lead. We have some silver. Okay, let's refine it and let's sell it for whatever we can get. That's the supply chain. And then you have an incredible bottleneck in the refineries, because the problem of the refinery is similar from rare earth. There is this thing, people think that rare earth are rare. Actually, rare earth are very common everywhere. What's the reason why they're not processed in Canada, they're not processed elsewhere, is because it's freaking expensive to process them. And China managed to get to a level of incredible efficiency for a fraction of the cost. That's why all the rare earths are processed in China. In the same way, 70% of the silver is being refined where? In China. Again. So, but now China has export controls, and a lot of people are starting to worry that if they send their silver there, they might not get it back. So this is why also you have a massive bottleneck in the refineries in the West. And people are like, oh, I cannot sell my silver coins and whatever. Yeah, because this is industrial type of demand for 99.99 silver. So it will take a while for this to normalize. And the more it normalizes, the more is going to be scarcity. Like again this year, for the 6th year in a row, there is going to be almost like 300 million ounces gap. And what is the price of something that people are forced to buy, but there is not enough for everyone? That's the question for silver. And that is effectively what's happening. So the events of the 30th of January are, to be honest, one of the most shameful things that has been done in financial markets since a very long time. I mean, the silver community was used to price manipulation. There have been convictions about price manipulation and fines and whatever. So it's not like a conspiracy theory. It's one of the few things that it's there, you know. It's already like proven, it keeps going on. And so they will keep doing that, but in that specific day, I mean, that nothing, that no system like, you know, volatility measures or whatever, nothing kicked in, like zero. And then the COMEX apparently like replied to some emails and they say that they have like dynamic trigger limits for volatility. And effectively, if the price moves in ticks that are close enough to the midpoint, these dynamic limits keeps resetting. So effectively, high frequency trading algorithms gained the volatility safety net at the COMEX. And I mean, and here is what I say. But when people were like, oh, silver is overbought, whatever, speculative mania. Silver crashed 40% in a single day in backwardation. I mean, wow. In backwardation, I mean, backwardation, by definition, is when people bid the spot higher than the future because there is a scarcity of that metal.
Yeah,
That's the definition.
and I think it's just something you mentioned before, where the correlation, it wasn't. I mean, you had gold fall at the same time. There was some reaction in the other markets, but it wasn't like there was some specific news that affected gold and silver. Yes, they had both rallied a lot, and yes, we see things like this, but I think that shows the liquidity impact, which you talked about earlier. And by the way, I might mention that when you're mentioning the coolant system at the CME, that was end of November, and then it was only a couple weeks later when people are finishing their Christmas dinner. Silver is soaring through the 70s. We wake up the next morning and the premium has spiked in Shanghai. So a lot confirming that. And Dario, I really appreciate your time here. Perhaps just one final one as we wrap up. It's been very interesting. Obviously, in October, shortage in London leads to a shortage in India, then leads to a shortage in London. To address that, we get metal coming from China and the U.S. We already looked at China's chart. But here's the thing that's interesting. We had all this silver go in the beginning of last year while we're waiting for these tariffs that not only were they never placed on gold and silver, but then a year later, the Supreme Court overrules the whole damn thing anyway. So it's kind of silly when you think about it, at least in my opinion. But nonetheless, as we continue on here, we see that, actually, let's go back to our 2 year. The peak occurs right into October, right when London gets popped. And then the metal has been coming out of the COMEX, and then it really accelerated beginning in January when we had the physical tightness. Now, in all fairness, I try to continue to point this out for people. When I hear the COMEX is being drained, it's like, well, we're now below the 2021 levels. So on one hand, there's still historically a lot in there. On the other hand, there's everything that you described. We see tightness in the market, and it's almost like 3 or 4 million ounces are coming out per day now. So perhaps we could wrap up by saying, what do you think happens here, and I don't know if it's a forecast we're looking for, but any thoughts of like what to expect in the next couple of months or any time frame really of where this goes from here?
Actually, I have a suggestion when looking at that specific chart. I would suggest to remove eligible stocks from the chart.
So it just
Because
registered?
eligible stocks is simply privately owned silver that is stored at the COMEX because it's cheap. It's not stock that is available for settlement of futures contracts. So it's very misleading to look at that amount at the COMEX as available silver because it's privately owned. They can decide to sell it, okay, but they cannot be forced to sell it. That is a storage effect. So what I expect things are going forward from here. I mean,
Wow, look at that. I
we
guess
are
I'd been looking at the combined one, but here's the registered.
yeah, that's what
200 in October. It's lost over half in four or
yeah,
5 months.
that's exactly what I'm telling people. And the reason why you see this is because the price is suppressed to a level that is cheap. So there's underselling like silver stocks. That's why they're being drained. But this is not happening just in the COMEX. It's happening across the globe. Even in China, where there is 10 to 15 US dollar spread before VAT, to be clear. So there is a premium, and the situation is even worse there in terms of tightness. So where things are going? The things are going that there is short term, medium term, and long term. As always. Short term, we are 2 trading days away from the March 2026 silver futures traded at the COMEX to begin settlement. And as per the last update, you have 87 million ounces of registered silver stock at the COMEX. And so far, the open interest, as per the last update, is like 170 million. And as we observe for many months now, the open interest that gets into settlement tends to be there because they want delivery of the metal. Everything has been stopped. And there is this very concerning trend. I mean, in January, that is not supposed to be a delivery month. We saw more than 40 million ounces of physical delivery. It was huge. In February, 100% of the open interest that went into delivery, into settlement, was delivered. 100%. And if you see the trend compared to 2025 and 2024, the amount of physical settlement at the COMEX is 2 to 3, even 4 times greater than that. So what's happening here? Exchanges are supposed to be a price discovery mechanism, okay, of a commodity, because the commodities were spread in the world, and then people meet in an exchange and they negotiate derivative contracts trying to find a price, and then they deliver to themselves as well. They close the hedging and so on. The exchanges are not supposed to be distribution venues for the metal, because that is exactly what's happening right now. People are going into these venues to fetch the silver because they cannot get it outside. They're not into these venues because they are just there for edging and taking the cash settlement. They want the silver that is in there. It's not elsewhere. So, but there is a problem. Not only in 2 days, we need to see, I mean, even if we see 80 million ounces equivalent of silver futures going down into Friday, I mean, what are you going to do? Are you going to deplete the whole registered silver at the COMEX in a month and keep the price like this? Right? In May, we already have 50,000 contracts. That is 250 million ounces of silver. What are you going to do? Right? And people are saying, oh, the COMEX can declare force majeure, whatever. Force majeure, it's in every commercial agreement or contracts and happen in really extreme cases. You cannot just declare force majeure to benefit one side or the other in an exchange.
They could always run out of antifreeze again. The
Oh,
engine could overheat.
yeah, actually, yeah, you know, perhaps, but effectively here, what I see happening is that while before the COMEX and the bullion banks' interests were kind of aligned, okay, in the past, the bullion banks were even in, the partners, back in the 80s. So that the reason why the Ant Brothers squeeze failed is because basically they changed the rule. It's like, okay, now you can only sell it, and you can only sell it to us at the price we will give it to you. So, but now you start to see the COMEX and the bullion banks' interest not being aligned anymore, because for the COMEX and the CME declaring force majeure and saying we cannot, fulfill the settlement of your contract, just get cash. People are like, what do you expect people to do? Are they going to trust to trade in that exchange? We already see volumes like very low, unusually very low in these exchanges. And that's not a very good sign overall. Truth that they increase the margins significantly, okay? But, I mean, these exchanges are in the business nowadays of making money from volumes and clearing and charging fees over it. That's their business. So clearly, it is not going in a very good direction for the CME that is a listed company, let's not forget. So I believe that till the 30th of January, they tried to support the bullion banks as much as they could. That slam was obviously like so blatantly planned. I mean, the reason about, it was because of Kevin Walsh being appointed as next Fed chair. I'm like, okay, if this guy was a oak and caused that on precious metals, why stocks didn't move? I mean, gold volatility and drop at that time was equivalent to the drawdowns we saw during the COVID crash and during the 2008 GFC crash. Gold is a central bank monetary reserve asset. It doesn't move like that unless there is a financial crisis brewing. But in that case, gold, because it's fetched for liquidity, the drawdown in gold is limited compared to the drawdown in risk assets, right? So, I mean, that day there was a bailout, let's be honest. Someone was badly positioned on precious metals. People were like, the banks were constantly feeding research and headlines to all the mainstream media to be short precious metals, okay? With the exception of gold, because now gold, I mean, it's obvious what's going on. Like China, India, like all the other central banks are piling up on gold as if there is no tomorrow, right? Because they're like, you know, U.S. Treasuries is dropping as a reserve asset. So the situation at the COMEX is critical right now, and these people, they have no much alternative than either praying for the longs to roll as many contracts as possible into May. By the way, the amount of like open interest in total has been increasing, so that's bullish into May. Or they have to repurchase their naked shorts. That's it. There's no much alternative here. But trying to force things into a situation where they basically threaten the COMEX of a failure, you know, that's not possible. This is not like the situation of nickel in 2022, where, to a certain extent, you might argue that that was not fair trading because there was an attack to a very specific concentrated short position in the nickel market. So what happened, and afterwards they canceled the trades. So, and there is a lawsuit going
That
on.
was wild. I couldn't imagine that back in my market maker days, where it's like if you go and trade all day and they're like, yeah, those didn't count. But
So you can actually, you can stretch things a bit and kind of like saying at some point, okay, like that's not fair market like trading. That's like not a functioning market. Let's reset things because otherwise everyone goes belly up here. Okay. Of course, the hedge funds like sued immediately. But here, it's a structural problem. There is not a bank, there is not one silver miner, like in the case of nickel, that is massively short. Here is a structural problem where people have been milking the silver market and suppressing the price for decades as if it was one like a Methuselah cow and never die and keeps like milking, and people were fine with it, right? But now we got a problem that, the money printer kind of started turning around because, oh shit, this is a commodity. It's not a stock. It's not like just an electronic ping on your screen. It's physical. So where are we going in the medium term? In the medium term, we're going much higher. Unless you're starting making less semiconductor, less solar power, less high conductivity electricity cables for data center. You're starting to make less EVs, less phones, and whatnot. But we are in a monetary inflationary environment. So people keep seeing money dropping into their pockets in the form of like endless consumer credit available. Buy now, pay later, buy now, pay never, and whatever. You see this money. And then they keep buying and buying and buying and buying. So everything, as we said at the very beginning, that is limited supply, you keep seeing money flow in, okay, they will keep raising the prices. So people are still buying like $1,500 phones where apparently lives like paycheck to paycheck and stuff like that. Everything is on credit, right? So, and the supply this cannot come online anytime soon. It takes years, the best case scenario. The refinery process, years as well. At this price level, recycling is not, business viable because there is so little silver widespread everywhere. And the cost, like electricity cost, manufacturing cost, everything went up significantly. So everything reaches an equilibrium at much higher prices. Eventually, at that point, people need to be careful because if silver gets a level of price high enough that it starts to become attractive for central banks, then it's back on the table as a monetary reserve asset. There are rumors of some central banks in the Middle East already buying that. And the reason why they buy gold instead of silver is mostly because silver is very bulky to store at these prices, right? But if you start seeing silver raising in price to a certain level, it becomes a monetary asset for central banks, but for the people as well, because at that point, gold will be so expensive and so many people that miss the opportunity to get it when the price was still affordable, that the only alternative is silver. Because we are in a very high inflation environment. Deficits are not going away anytime soon. The M2 money supply will keep growing. Financial condition will be kept loosened. Otherwise, the whole financial system goes belly up because they have been giving credit to anything. Okay. And so the money printers will keep going. So precious metals is literally the safest bet out there in this kind of situation. And in the specific case of silver, you need to be ready for, and I keep saying, as I said it before, and I said now even more after what I did on the 30th of January, and then the day after, and then on the Thursday, the 5th of January, when it came out the news that that dude shorted alone 450 tons of silver in Shanghai, while there are only 350 tons in total left into the exchange.
Yep.
I mean, so be prepared for incredible things to happen. And people that have been following me and paying attention, there are very strange things happening in the volatility spectrum in silver right now. Yesterday, at some point, the volatility priced into silver future options was 134. It was above the peak that we reached on the 30th of January. And you see the price not moving. So market makers are not stupid. They know there is an upside risk here that can trigger at any moment. So they're in the business of market making options and selling options. So they're like, okay, you want to buy an option, a call option from me right now? Here is the price, 3 standard deviation. And then you're like, but look, the price is a straight line. How is it possible? If anything, it goes down. Why so much? I'm like, well, that's the price. Up to you. So, and you see all these shenanigans going around the volatility spectrum. So as we're talking, like silver is back at $88.6. I mean, yesterday I was so sure that they were going to manipulate the price into the reopening of Shanghai that I took a video. I was there. I put the screen, and I took a video in real time, and I posted like, "Hey guys, look at this." And then you see, boom, 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 boom. And to conclude, only in February the Shanghai Future Exchange stopped. Sorry, I'm getting like the correct. I'm not getting the correct term. Basically blocked from trading 23 group of accounts for breaching trading rules at the exchange. At 23. And actually, before the events of the 30th of January, actually there was a day they blocked like I think 10 or more group of accounts because you could see they were like trying to slam the price across the board, because it's not only a COMEX problem. Even in China, there are a lot of naked shorts because everyone was like, oh, people are biased. They don't do the homework anymore. They just look at the chart, whatever. Oh, the RSI is overbought, stuff like that. I'm like, this is a commodity. How can you overbuy a commodity? That's the point. So ultimately, real price in the physical world and paper price will converge to the balance between demand and supply. They like it or not. Alternatively, no one is going to care anymore about the paper price. And it becomes a mess all around because people will start having like local price of silver. Maybe from one city to another is going to be different. And that's a big problem for global corporation and supply chains because they cannot like get financing. They cannot put projects in place and whatever. They cannot do budgeting and stuff like that. Price their own products, right? So clearly we're going much higher. How high? Who the hell knows? Because at some point you will start seeing demand destruction. At some point people will not be able to afford, because in a phone you have 7 milligrams of silver. If the silver price goes to 10,000, okay, it's a lot, but 7 milligrams. Okay. in a phone that they sell to you at $1,300 with a huge margin, because that's not the cost of components they pay to their Chinese manufacturers, right? So there is a little bit of space in those 80% margins in those widgets. But if you're talking about solar panels, yeah, that's a problem. You know, in solar panels, at some point it will become too expensive. But in the case of solar panels, perhaps then recycling can kick in. Right now, recycling is on average between 100 and 200 million ounces a year. You might start seeing people scavenging and hunting for silver, because if the price is at 200, 300, 400, well, then recycling starts making a lot of sense for junk silver and so on.
Well, we're in it now. I mean, I guess you don't want to tell the grandkids, "Oh, I wish I'd been there when silver finally did its thing." So it might be a little nerve wracking at times, but how exciting to be in the middle of it. And Dario, perhaps just in wrapping up, you can let folks know as we watch these things unfold where they can stay up to date with the research that you put out.
Well, I am on X. I have a blog, JustDario.com, and like last year, I started to, upon request of many of my followers, they wanted to have the equivalent in video. So I started like a YouTube channel where I present my research in basically podcast version.
And that is over on YouTube. So links to all of those in the description field below. And Dario, sure appreciate your time. My night, your morning here. But yeah, I mean, it's. I guess that's the thing that really has hit me these last couple months, where whatever amount of silver you do or don't have, I mean, we're seeing history being made, which, if you're a student of financial markets, certainly a lot to be fascinated by, and you do a great job of covering that. So thanks for making some time. We'll have to do this again soon, and it's going to be a fun year, whatever happens. But I mean, I think laid out a good case why the idea that silver is going back down to $20. I don't think that's happening, and but either way, thank you again, and we'll do this again soon, my friend.
Cheers. Have a good one.